My name is Barry Minko. At age 16, I started a ZZZZBest carpet and furniture cleaning company, and by the time I was 20, it was worth well over $240 million and a hot stock on Wall Street. There was only one problem with the company and me. We were both frauds.
They say your conduct may be fraudulent, and they need a closer look. They're alleging personal enrichment. They're saying you've been cooking the books.
I'm Joseph Wells, chairman of the National Association of Certified Fraud Examiners. Barry Minko committed one of the largest financial frauds of the 20th century.
This video will cover three famous financial frauds: ZBest, Regina Vacuum Cleaner Company, and ESM Government Securities. These schemes, featuring the actual people involved, all had one thing in common. They were devised to make business look better than it was. Although there are many variations, 8 basic methods are used to cook the books. 4 of these schemes involve overstating revenues. They are premature revenue recognition, improper treatment of sales, revenue substance versus form, and percentage of completion accounting. The remaining schemes are deferral of costs and expenses, improper asset valuations, related party transactions, and inadequate disclosures.
I'm Barry Minko, president of ZBest Carpet Cleaning. Your carpets deserve the care and expertise of our licensed, bonded, and insured technicians. So call now. I'll guarantee the work and the price in writing.
At the age of 16, Barry Minko started a carpet cleaning service in his garage. It never made a legitimate profit, so he decided to cook the books. Within 5 years, his scheme had unraveled, and he was sentenced to 25 years in prison for defrauding investors of over $100 million. For the first time, Minko talks about what he did and why.
Well, basically the fraud was, we had a carpet, furniture, and drapery cleaning that was legitimate. We owed a lot of money to a lot of people, borrowed to expand on the way up. I couldn't get bank loans a lot very easily, and I got caught up in paying usurious loans, borrow from Peter to pay Paul. And in the process of getting caught in those usurious loans, I got myself in debt and began to perpetrate a restoration fraud, a fraud that would say that I'm making more money than I'm really making, and I need to borrow more money than I really would need to borrow if my company were legitimate. So I needed what we call a built-in excuse. Why are you always short of money? I got these restoration jobs. And I had to fool accountants and auditors into believing that those numbers were real before I could perpetrate that fraud. And nobody loans money to a company that's losing money. So of course I had to be profitable in the process of needing money. So all that was the crux and the foundation for the fraud.
Since Minko was in the red from the start, he borrowed money constantly wherever he could. He used phony financials to borrow as much as he could from banks. When his credit ran out, Minko owed so much that the only thing that would save him was to go public with a stock offering. To explain why he needed so much money, he told his auditors and lawyers that he also restored buildings damaged by fire and flood. To show income, he created phony customers. And to cover his debt payments, he created phony expenses.
What I did was I created false vendors like Marble Marketing or Tough Techs, and created invoices and created literal front companies who I could show money going to.
Although he never had an accounting class in his life, he knew the importance of receivables.
Well, accounts receivable are a wonderful thing. They are a tool that is used by a fraudster like me to ask to borrow money, mainly, and to show earnings. So I can borrow money, hey, I need the money, look at these receivables, and I could show earnings. Because once you book the receivable, you're already counting for the income, and you're showing earnings. So what I need to do is create a receivable. And because I had this company that we were doing these insurance frauds from, and I had their letterhead, I could make up any letter and any invoice to say that they owed me money for doing this job. I could take some checks in the past and say that they were supplies for the job, and I could piecemeal it together, the detail stuff along the way. Bingo, I have a receivable.
Minco also knew the two tests auditors use for accounts receivable: confirmation with the customer and subsequent payment of the receivable.
One way you cannot dispute a receivable if it's been paid. If I have a $500,000 receivable from Interstate Appraisal Services and it was supposed to be net 60, and on day 58 I have a $500,000 check to show them, how can they not book that? How can they doubt that? So something that they used to try to detect the fraud actually worked in my favor, because I was a paperwork manufacturing machine.
Joe Dominic wrote a book about Barry Minco called Faking It in America. Dominic claimed that Minco's auditors had been satisfied with examining photostatic copies of original documents. Once Minco realized that, committing fraud seemed very simple. All he needed to succeed was the help of his two lieutenants, Tom Paget and Mark Moores.
Mark Moores was a master of the copy machine. He could play the copy machine like Horowitz played the piano, and he could essentially cut up anything and make anything. Go to the library, find the model, and make that. And through a series of copying and Xeroxing, he could make any document you wanted, essentially. And as long as it could be a copy, he could produce it. If you wanted an original, then there was a problem.
You take the checkbook of the phony setup company, Interstate Appraisal Services. So you take a check, you got an invoice 7727, $300,000, net 60. You got a check that says 7727, job well done, check's there. Here's the check, and I tie in a $300,000 deposit off the bank statement that was deposited on the same date that check dates. There's the deposit. Really, the deposit was to do a kite. But it tied together so nicely, what do they know?
What the auditors didn't know was that Minco's restoration business, which comprised over 80% of his earnings, was completely phony. So to avoid detection, Minco steered his auditors and lawyers to the legitimate part of his business.
You know, the restoration business was maybe 80% of the income that I earned, allegedly. But 80% of the due diligence that I tried to get the auditors and the lawyers to look at was the carpet cleaning end of the business, which was legitimate.
W. Michael Kramer is a lawyer and a certified fraud examiner. Here he comments on the common law definition of fraud.
Well, fraud comes in a huge variety, but the generic definition of fraud is an intentional or deliberate misrepresentation or false statement which is designed to gain an unfair advantage over another. And the key word in that definition is intentional. There is no such thing as a negligent fraud. It has to be some intentional scheme which is set in place, which is designed to deceive another.
But I think the final touch was, well, the kids on Wall Street, if there was something wrong, somebody would have found it by now. And they see a media figure, they see a Ferrari in the house, and the guy's got to have money. Well, the Ferrari's leased and the house is mortgaged to the hilt, but what do they know?
What the auditors didn't know was that Minco would use any trick in the book to influence them.
I'm going to be nice to those auditors. I had them over for dinner. I went over their houses for dinner. I wanted their wives to know me. So if they had to go against me, they had to hear their wife say, I think he's such a nice boy. I wanted to make sure if they were going to go against me, they were going to go against their own wives.
W. Steve Albrecht is president of the National Association of Certified Fraud Examiners.
Barry Minco himself, and I think probably all perpetrators, worked very diligently to break down independence. Now, the auditor probably doesn't understand that that's going on, doesn't understand that it's intentional, but maintaining absolute independence, both in fact and in appearance, is extremely important.
Public accounting is a competitive business. Barry Minco knew that and used it to his advantage.
And so they're in competition with one another, and their competition is what you leverage. I can't remember how many times, Larry, I just know Coopers and Librarian would love this account. You know, does he want to go back to his clients and the manager and everybody and say that they lost the ZBest account because they wanted to be petty, because they set the ground rules and we abided by them? Do they want to lose the ZBest account? No, they don't want to lose the ZBest account, and I leverage that to the hilt too. So you got to remember something. Yes, you want to get to know your client, but you want to maintain your objectivity, and I believe the auditor's responsibility is to give up the $100,000 a year fee to prevent the $16 million fraud.
Ever the masterful manipulator, Minco knew how to make the auditors feel important.
Give me your business advice. That's one way to get them. Oh boy, this guy wants my business advice. This is big time, you know, whatever he is, wants my advice. Boy, that makes me feel good. Manipulation. Take a look at this contract and tell me what you think. Tell me how we can make more money off of this account. Take a look at my Lancaster store. Here's the numbers. What am I doing wrong there? Bringing myself down, asking them a business advice question, and getting their focus totally off of what I don't want them to be on. You want to check how many chemicals we have? We have, you know, $300,000 worth of chemicals. Take a look at our chemical company. We manufacture and private label our own chemicals. What, you're going to tell me this is a fraud?
Indeed, it was a fraud. Minco says the key to uncovering his schemes was to understand what he was doing at his banks.
I had burned, literally, probably 6 banks at the time the auditors wanted to do business with me. The banks failed to give them the necessary information they needed to determine what kind of person I was, to my advantage.
Minco also knew how to confirm banking relationships.
If they're going to mail a confirmation to the bank, fine. We don't care what it says our balance is, our average balance is, and how much we owe. That wasn't where the fraud was happening. The fraud was happening with 3 banks, kiting checks back and forth, inflating a false balance. The loan payment, heck, if you make a loan payment, you know, what's the problem there? And there's just no accountability. It's the auditors are being cheated, I believe, by the banks not getting enough information from them.
Not only did Minco know how to hide his banking problems, he also knew how to redirect the auditors when they wanted to call some of the non-existent customers for his phony restoration jobs.
Oh, if I had one guy check one job or call one of my companies, did I raise a stink about it? You know, look, you guys already did this once. You're just grinding me. I was the customer who was saying you're going to hurt my business. Then the auditors say, my gosh, I could get a lawsuit for destroying this guy's business. And then they're caught.
Joe Dominic takes a more sinister view of why Minco's fraud wasn't detected.
But nobody, I think, was looking too hard. Nobody suspected to find anything, but nobody wanted to look too hard because everybody was making money. The lawyers were making a lot of money. The accountants were making a lot of money. The underwriters were going to make a lot of money. So nobody wanted to look too hard. An additional aspect of it that made it succeed was that it was so audacious. I'll never forget Tom Paget telling me this, that for something this audacious, this big and audacious to happen, we would have had to do what we did. And nobody believed that somebody would do that, would go to the lengths that they went to.
If they doubted the financial wherewithal of ZBest, well, I pointed them to the stock price. And although the auditors are not supposed to look at that, you can't help but ignore a stock that goes from 5 cents to $18. You know, hey, these are Wall Street analysts. They know due diligence. They know numbers. Don't you think that they would have found something out if there was something to be found out? And by having all these people, the media, the lawyers, Wall Street, the financial analysts, the stockbrokers, all hyped about ZBest, I basically boxed the accounting firm in a corner. Oh, and said, you're not going to be the only rotten apple, are you? What do you need to satisfy yourself, and I'll satisfy you to fill your file.
What is truly amazing is how it got as far as it did, not that it came apart. Because when you're selling nothing for so long, and when you're dealing with professionals whose business it is to ferret out, to verify these things, it was amazing.
Number one thing that we had to do as a fraud team was consistency. A lot of what the upper management in my case, was involved in the fraud and only the upper management. We were very careful not to tell anybody else, so that they're built-in innocent, you know? When they're talking to the auditors, they're not putting on an act. So the less people that had to put on the act, the better, and the people that are putting on the act better have the story straight.
Dominic says the auditors could have done much more to uncover the phony restoration business.
Well, for example, let me just read you something here. You know, no one ever asked about construction licenses, traffic abasement permits, payroll records for the hundreds of people who should have been working on the projects, OSHA reports, local and state permits and inspections. They never asked about any of that. So I think that was one of the things, one of the red flags they should have looked for. I think a second one was that the contracts worth millions of dollars would be on one piece of paper with no specifications.
I think as auditors, we get preoccupied with making sure that the work papers are well documented, but we don't look at the nature of the documents. We don't say, does this document or do these documents really make sense? We tend to be more satisfied if the document is there, not whether it looks like it's a legitimate document or not. So, and that's just an example. I think we have to look beyond the numbers themselves to see whether what we're seeing really makes sense.
Ironically, Minco's fraud wasn't detected by auditors.
As he became more and more famous, as he became the boy wonder, people who he had scammed in these petty minor ways started to make some noise.
The noise came from a Los Angeles housewife. One of Minco's many tricks to raise money was to overcharge customers who put carpet cleaning services on a credit card. If they complained, he would eventually return their money. If not, he'd keep it. This particular housewife couldn't understand why Minco, the boy wonder, wouldn't refund her money. She finally called a local newspaper reporter who discovered that Minco had cheated hundreds of customers in the same way. Within days of printing an expose, the price of ZZZZBest stock had fallen through the floor. And when the dust had settled, the assets of Minco's $240 million company were sold for less than $50,000. The bubble had burst.
Again, without putting the pressure on the auditors, you got to pull yourself away from the numbers. And hindsight's wonderful, you know, to look back and everybody says, how could you have been fooled by Barry Minco? How could anyone have fallen for the old fraudulent building restoration scam or an old Ponzi scheme? Well, very easily. The press says I'm gold. The banks said I was gold. I had Hughes, Hubbard & Reed as my lawyers. I was doing well on Wall Street. And I leveraged my auditors by saying, you don't want to be the only one, the only non-believer, do you?
The external auditor's responsibility to detect fraud is defined by the American Institute of Certified Public Accountants Statement on Auditing Standards number 53. It states that the auditor should understand the characteristics of errors and irregularities, assess the risk that material fraud is present, design the audit to provide reasonable assurance that material fraud will be detected, exercise due care in planning, performing, and evaluating the audit, and approach the audit with professional skepticism. Barry Minco comments on some of the characteristics that he feels will help the auditor assess those risks.
Three things. Highly leveraged. A lot of leases and not a lot of owned assets. I believe a company that makes $1 million a year, well, where's the money going to? If he's making $1 million a year, why does he continue to lease his equipment? And I know the answer would be because he wants to expand and use that money for expansion, but that just doesn't make a whole heck of a lot of sense. Either he's reinvesting it in the company or it's going somewhere. Where's that $1 million going to? Highly leveraged, owned assets, and unbelievable growth. It's very rare. You know, the computer business, perhaps, the software business, maybe, but anything else, hardly ever, that you're going to see a $4 million company go to a $40 million company overnight unless it's a fad of some kind.
The risk of fraudulent financial reporting is present to some extent in all enterprises. Assessing this risk involves two steps: analyzing the company's internal and external environment and assessing how these environments affect the risk of fraudulent financial reporting.
We have to look at what it is that motivates the officers of this particular company. In Barry Minko's case, he was totally motivated by making ZBest appear successful, appear to be generating cash, so that his stock price would go up.
Some of the risks that affect the internal environment include internal controls, the accounting system, management's attitude toward fraud, the administration and operations, and whether the business is dominated by just a few individuals.
Watch that guy with the big ego. Watch that guy who loves to be on the screen, because that's the guy who will do anything to keep his name in the paper and print. Watch the guy whose stock's going crazy and very high profile, because that's the guy that will lie on a 10Q rather than suffer his stock going lower because his earnings were down. Watch that guy. Watch that guy that has no respect for anyone but himself.
The auditor should consider the company's liquidity, profitability, its ability to borrow money, and the quality of its receivables.
I believe one thing. A fraudulent situation is always in need for money. And yes, I know that entrepreneurs are growing businesses out there, and they're also in need of money. But there's one difference. The fraudulent man has to have that money because he owes someone else or is holding something together. And he has to expand and he has to grow because that expansion and growth are excuses for the need of his money. The entrepreneur, on the other hand, will have a business sense to be able to say, maybe growth is not what I need right now because the finances are not available. The banks aren't looking at me. I need some more track record. Because his business is real, he can wait a year. If somebody said wait a year to me, I would have been under.
SAS 53 states that the auditor should also consider any recent changes in operations or products, new production techniques, a business with few major customers, industry trends, assets or inventory with valuation problems, and large or unusual adjustments near year-end. There are other risk factors set forth in SAS 53 as well. Joe Dominic contends that industry comparisons would have helped direct the auditor to potential problems.
Does $3 million for a restoration job seem excessive to you? Does $7 million or $8 million seem excessive to you when in fact the largest legitimate restoration job ever done was $2.4 million?
More than anything, assess the people who are making the decisions. After all, they are the ones who can cook the books.
If you or I worked as hard as they worked, legitimately, or if they had worked as hard as they worked, legitimately, they would have been rich men anyway, I think, because they were so smart.
One of the best ways to uncover fraud in financial statements is to analyze the past trends of a company's performance. Dr. Steve Albrecht comments.
But the balance sheet and the income statement, we have to convert to change statements. And there's two ways to do that. We can either do that by taking ratios. We can look at the changes in the raw numbers, but that's not very helpful. So we either have to convert them to ratios, or we have to do something called horizontal and vertical analysis, where we look at percentage changes. And if you do that in companies like ZBest, in companies like Regina, in companies like ESM, things just fall out that don't look normal. The changes just are unbelievable.
Historical trends can help uncover possible fraud. Let's examine the ZBest financials. Look at its tremendous, if not unbelievable, growth. In 1 year, sales grew by 290%. In 15 months, total assets were up over 4,000%. Fixed assets compared to total assets dropped. In 1985, there were no accounts receivable. 15 months later, that figure was almost 2.5 million. Of course, as it turned out, most of these receivables were fake. While assets and sales were going up, general expenses dropped. These figures don't prove fraud, but they certainly give the auditor reason to look further.
Is ZBest an aberration? Not according to Barry.
You know probably how many Barry Minkos there are out there right now? A lot.
They say your conduct may be fraudulent, and they need a closer look. They're alleging personal enrichment. They're saying you've been cooking the books, and the lawyers are gone.
This is the Regina Vacuum Cleaner Company after Don Sheelan got a hold of it.
Gail Nichols is a former federal prosecutor. She prosecuted Regina President Don Sheelan and other company executives for preparing false financial statements.
It appears that Don Sheelan wanted a successful business and he was willing to get it at any cost. He did it to maintain a successful business.
Don Sheelan invested his life savings into acquiring the controlling interest of the Regina Vacuum Cleaner Company. After that, he had to figure out how to make some money out of his investment.
Regina Vacuum had been in business a long time when Sheelan took over. Sheelan had big plans to increase sales and diversify the product lines. That was a mistake. Sales fell short of his rosy predictions. Rather than tell the shareholders, Sheelan turned to his chief financial officer for some creative accounting techniques.
In effect, what Don Sheelan did was talk his lieutenant, Vince Golden, into cooking Regina's books.
The first time I met Vince Golden, I was particularly struck by what a nice person he was and by the fact that he would have never committed the crime he did had he not felt forced to do it.
Golden employed one of the 8 common techniques for financial statement fraud: premature revenue recognition. There are 4 schemes associated with this technique: holding open the books past the close of the accounting period, bill and hold schemes, conditional sales, and delayed posting of sales returns. Golden also failed to post certain expenses at year-end, thereby increasing net income.
The nuts and bolts did not ever become wholly public, but simply put, it did become public that Donald Sheelan directed Vincent Golden, who in turn directed others, not to record returned goods as they were returned to the factory. In addition, Donald Sheelan told Vincent Golden, who told others, to create false invoices, thereby creating false accounts receivables that went on the books and records as assets. And finally, again, Donald Sheelan told Vincent Golden, who told others, not to report all of the expenses, and thereby they created a scenario where the net earnings per share was higher than in fact it was.
The auditors for Regina might have been a little bit more suspicious if they had realized how much Don Sheelan really had to lose.
At the point that he became the CEO, this business totally changed. It was as if a new business emerged, and the auditors should have recognized that. They should have said, this is no longer the same business that we used to audit. All of a sudden they went from 1 product to 4 products. They diversified, they changed almost everything they did. And again, you have to look at him and see what motivates that CEO. I mean, if you've read the story, Sheelan had a sister who was extremely successful, and he was somewhat jealous of her success, and he wanted to be successful. And again, his personal worth was tied to the company and the stock price of the company. And so his personal worth, his total life was tied to Regina and making Regina successful. And, you know, we should know that, and we should understand